Street traders decided to take profits today, and who's surprised? Because after all, the markets have been on a rally nonstop ever since Chairman Powell came out and gave his dovish theme at the last FOMC meeting presser. So where do we go from here? Well, it does seem that we're still going to have an upward trend because only two of the big markets on the broader rally were actually up today. But what are we going to do from here? Well, we brought in the expert among experts, Ned Tunmore. He is a registered investment advisor with Tunmore Advisor Solutions, Financial Solutions, out of Buffalo, New York, and he's going to explain everything for the audience today. Welcome to
now I understand why we have Ned on the show. He's from Buffalo.
He's a Buffalo guy. We had to represent Buffalo one way or the other.
You got it.
Ned, welcome to Buy, Hold, Sell.
Yeah, pay no mind that we're 5-5. The Bills are coming on strong. The second half is when they peak. You guys know that. Coming on strong.
I'm with you, brother.
Yep.
There you go. Well, we'll see what happens. Well, listen, Ned, I have to some legalese because your boss, MassMutual, asked me to say a couple of words. And because Buy, Hold, Sell, we always like to remain compliant. We want to do the right thing, and we respect, obviously, policies and procedures. So I'm going to read a quick thing for everybody, for the audience, all about Ned. Well, Ned,
I'm gonna go get a beer while you read that.
You go get a beer. This is going to take about 18 seconds. Ned Tunmore is a registered representative of and offers securities and investment advisory services through MML Investor Services, LLC, member SIPC. Tunmore Financial Solutions is not a subsidiary or an affiliate of MML Investor Services, LLC, or its affiliated companies. And his address is 300 Corporate Parkway, Suite 216 North, Amherst, New York, 14226. Ned, I think I covered it right there.
You nailed it. 10 out of 10. 10 out of 10.
There you go. We're superstars right now. And we obviously will have this to satisfy your compliance department. We'll even put this in the description. We'll go above and beyond to stay compliant. But Toby, I am going to start with you today because all week long we've had guest after guest that have really been, I would say, optimistic. I would say, Samantha LeDuc from LeDuc Trading did give a very pessimistic tone on that 10-year bond yield, but that's a discussion for another day. But what do you think? Going into the holiday season here, we have a shortened week next week. Do you think this is the time to get into the markets?
Well, there's never, Todd, there's never a time to get into the market, a time to get out of the market. I was talking with subscribers of mine today, it's the managed account people, and I sent them Toby's list of the 10 rules of if you're going to run your own money. Here's the 10 rules you got to follow. Rule number one is, you have to have a thesis, an idea, concept of what you think is going to be happening either at the macroeconomic level or at the microeconomic level, right? Number two is the way you test that is if you start to barf when your stock's down 5%, then number three, you've done two stupid things. Number one, you should have never bought that stock at the first place or ETF unless you wanted it to go lower because you wanted to get the lowest cost base. We're not collecting baseball cards, right? We're trying to build and keep wealth.
That's right.
Secondarily, if you barf at the 5%, then you own too much of it, probably. The way the litmus test always is, hey, matter of fact, with the guest we had yesterday, I'm a big buyer of these Defiance ETFs. And I had a chance to add some last week on one of these things. For $100,000 in a ETF, I got a $5,800 dividend. The actual ETF didn't go down in any value because they're trading these one-day options.
Yeah.
Many times on some of these, yield max things, the ETF's here, and then as soon as it puts the dividend out, it comes down exactly the amount of dividend. It doesn't work that way with the daily ones. But my point is, I was hoping to be able to add more. And when you get a $5,700 dividend check, since I don't need the money, it's in my Roth, I reinvested it. And that's how you know that you have a solid thesis that you believe in and that you're going to make money. If today scared you because the Russell was down, 1%, call up Ned, give him your money because you're not, emotionally equipped to be a stock market investor.
Completely agree with you. Well, Ned, what are you telling your clients? Because they have to be walking in there. I mean, we went through some tough times in the markets in August and September. I'm sure you got a number of your clients that are saving for retirement, college tuition, et cetera, et cetera. Yes. What's your strategy going forward, at least for the rest of this year?
Yeah, the biggest question I'm getting right now is you're looking at a 500 basis point move in the interest rates in the past 13, 14 months. We've never seen that before in history. We had a cooling off CPI number, PPI number. Walmart. What I found interesting is Walmart reported today to really weak guidance going into the year, and I think a lot of the inflation pressures that's the country's been dealing with is really starting to take a foothold in how people are spending money, especially the consumer. Going into the holiday season, I have a handful of clients that are actually looking to retire in the first half of next year. And they're asking me, they're like, should I just pull the plug now? Even though historically speaking, the fourth quarter of every year preceding a presidential election, which is where we are right now, has been usually always a phenomenal quarter. And we've had a NASDAQ do close to 10% in the month of November already. So, we're looking good. But I do think that if Powell is able to come out and say with some, relative definitive that we are at, and he's essentially roundabout said that, but we are at the precipice of where we're going. I know that there's going to be no rate decreases for probably, another year on top of that. I do think that we will get a little bit of a pull forward with some of the technology names in certain sectors that we were talking about. But it is a double-edged sword because of the bond yield where it is. And the fact that a lot of banks and money markets are still paying very high fixed interest right now. So I kind of look at it at a 6-month timetable, with the next 6 months being, I'm hoping, optimistic. But then we got to look to maybe pull the plug a little bit as we get deeper into the election cycle.
Yeah, I mean, Ned, remember that almost everything that the inflation nutcases have been saying, none of it's there anymore. Oh my God, we're going to have $100 oil, or the Middle East is melting down. Well, geez, it closed at $72.15. We've been short oil with the SCO, which is a short oil. Why? Because we have more supply than we have demand right now in oil. And the United States is the largest oil exporter in the world. And we're the largest natural gas. And look at natural gas. Well, natural gas is driven by winter temperatures, et cetera. Right. But all of those prices are coming down. The Walmart issue was interesting, but it was because simply that the move towards selling lower margin food as opposed to, $30 shirts that was made in China for $2, when you change that mix, your margin goes down. They've been a pull forward beneficiary, but overall, you can't look at the thing that happened this week was all of a sudden the Russell 2000, the small caps, just exploded up 7.5%, 12%.
Yeah.
But in the short term, that was because everybody was short that thing, and as soon as it shot up, then the short covering hit, and becomes a self-fulfilling prophecy. Right. But if you're investing for the next 2 years, 5 years, 10 years, you should not care about that right now. Or if you are, then be a trader and buy these one-day options.
Right. As well as I do, I mean, some members of our audience, the proximity to retirement is only a couple of years away. They can't think longer term. You're talking to a guy that might be in Topeka, Kansas, has $500,000 in a retirement account, but he's scratching his head. He wants to know, hey, is this rally going to continue? I mean, what's interesting is you got to wonder how many people actually were on the sidelines and missed that big up day the other day. I mean, that would be awful because they felt, oh yeah, I had to get out, and then he missed that. And now those people, and you talk about this all the time, Toby, that FOMO crowd. Now, how many people over the weekend are reading the paper and they're going to jump back into the market starting next week? I think this is the sign of good things to come.
It is exactly. What you're saying is that's how a healthy market works. Yes. Markets don't go up. I mean, if you started investing in April 2020, then you've gone through the meme FOMO, you've gone through the SPAC FOMO. We've had every FOMO. We had 28 million accounts opened by people under the age of 35 years old. Dude, stimmy, and then you go on Reddit.com and David Huang lost $15 billion in his hedge fund because the Redditors went after him. I mean, we've had things that have never, ever happened in the world. Oh, yeah, and by the way, yes, interest rates went up 5% on the Fed. So there, I say this a lot, that the playbook of 2020 is over. The playbook of 2021 is over. The playbook of 2022 is basically over in 23. Now we're on to the playbook of 2024. And if you follow the macro, the interest rates, the inflation rates, et cetera. Todd, I've talked a lot about this, that rents were super record high last year this time, we're actually more in October. And sure as heck, I almost said sure as shit, sure as heck, they're coming down. I'm using the example of the guy, down the street here who listed his house for a ridiculous number, like if this was like 2022 or 2020. And I had just happened to text the realtor because I knew it. I said, "So Bobby, how'd old what's his face do in the house?" He says, "Nobody showed up."
Yeah.
Oh wow.
I mean, so we are returning to a normal system, and because we've had really 3 bear markets in 18 months, put that in the record books too. We've never had that. We've never had that before.
So, Toby, what was it? What was the last administration that interest rate is Jimmy Carter, right? That we had interest rates go up this quickly in this short period of time.
Yeah, Todd's heard this a million times. I was selling bond funds to pensions in 1982.
Yeah. And that's before my time. But how long did it take for that interest rate market to right itself after that?
Well, here's what happened. We went to 11% unemployment.
Right.
And that sort of made people get a little jittery. So they cut the rates very quickly. But in April of 83, I was selling a bond fund of 5 and 10-year U.S. Treasury bonds, and the yield was 15.8%.
Wow.
And a lot of those were original issue Treasury bonds.
Yeah.
So, but this, priced at a discount. Right. So those bonds went up, almost 100% over the next 10 years. And that was where the 60-40 malarkey, was born, is that, hey, when bonds go, when stocks go down, bonds go up. Well, that didn't work either, did it?
Right.
So, I just like, keep it simple, stupid here. If you're a do-it-yourself investor, dude, the QQQs have beaten everything for 2 years, 5 years, 10 years, except you don't have to, get too jiggy.
Yeah.
I'm buying the QQQY, which is the high yielding version of that.
Yep.
And so when you match a QQQ with a QQY, you're getting 30% dividend on your QQY. You're getting, growth on a QQQ, and it's brain dead. And if you just put money in every month, you don't care. Or if you put it every quarter, you don't care.
Yeah.
But you have to be astute enough that, if the caca hits the fan, and let's say Russia invades Ukraine, or we have a pandemic, that you're going to want to build cash because everyone's going to be frightened, scared to death, and they're going to sell. Todd's heard this a million times. We bought MLPs that were $22 MLPs for $4 in April 2020 because retail people are, get me out, my head's on fire. And that's when you, as an investor, do that
again, please.
Yeah.
Well, I don't have that much hair to do that with, but I'm saying that if you understand the emotional context of the stock market, whatever the stock market is, because it's a function of all sorts of things. But then you can say, here's what I know for sure. When everybody's head's on fire, I'm going to be buying because the United States is hard to bet against, right? I think this guy Buffett or someone says that. And then secondarily, when your stupid brother-in-law calls you with a stock tip to buy a SPAC or a meme, and he says, "Yeah, I got all my IRA in it."
Right.
Sell.
Right. That's your exit strategy. Yeah.
Ned, before we go to the break, I am curious, do your clients, are they asking to build up their cash positions? I mean, obviously with interest rates so high,
Todd, that's a good question. I think every client's different, but speaking exclusively to the clients that are about to retire, I think if their investments are needed to provide an income immediately, the advice that I have to give in this short period of time is I'm more on the conservative, even though
Sure.
I understand everything you guys are saying. A lot of times people, gone are the days where people can retire on a pension and Social Security and sail off into the sunset. It's not that world anymore. And I think that the investment, especially because people are living longer and deeper into retirement, that's a reality. And as everybody knows, Social Security does not keep pace with inflation. Most independent private companies have long since offered pensions. You got to be a municipal worker to get anything like that. So the investments are normally needed to be leaned on very early in retirement. So if I have a client who's 65, who I intend to live to 95, that's 30 years of appreciating assets with a distribution, usually on the qualified ticket to where there's taxes, that now I have to kind of build into their overall plan. But I agree, Toby, I really, what do you guys think is going to happen with the election? Because I'm all over the place with if it's, I was worried the last two elections and the market performed very good post-election post-election both times.
Yeah, but the last two elections, interest rates were minus 2%.
I understand. But don't you think?
Don't throw a dart and buy stocks that went up.
But don't you think it's in both candidates' best interest to get interest rates? I know Powell's his own guy, but they're gonna point to the stock market as a scoreboard, and they're both gonna want to take credit for it, whoever they are. So don't you think that in this time next year, or a couple, this time 10 months from now, don't you think interest rates are going to be yesterday's news and we'll be moving on to something else?
It depends on who you ask.
Well, I lived in Washington, D.C. for about 30 years, and I know a lot of, and I've worked for Fox News for 15 years, so I've, met a lot of those guys.
Yeah.
Here's rule number one if you want to stay the Fed chairman. You do not freaking raise rates in a presidential cycle.
Exactly.
Right?
Yep.
So that's literally a written rule. I'm sure it's just like written on the back of like the chair for the chairman. You do not raise rates. And number one. And then number two, I watched the current president last night on his speech, and that scared the hell out of me because
yes. Thanks for saying that.
I thought he was going to pass out at any second. So now comes to the third issue is if he's still going to run, which I guess he's going to run,
right?
Then if the Republicans could actually bring someone that doesn't polarize into people, I think they could do very well. It's just for all the obvious political reasons that's not going to happen. And so therefore, if you project forward to these debates, oh my God. I think people just with normal apolitical people like me just look at it, as a human being observing other human beings. You're not going to feel that great about the United States. What you are going to feel great about is that the inflation, all those drivers of inflation are all disinflating. Yep. And so that helps the incumbent. That means the market's going to, be relatively healthy. God forbid some outlier event. And now we know that the Middle East can be on fire and oil prices go down. I mean, we had oil bid up to $95 a barrel right after the Gaza invasion because, the assumption was this was going to again be a replay of 1982 hostage situation and so on and so forth for people like me who are actually alive then. It's not happening. The Middle East is not biting their nose to spite their face.
Well, I think, I'll go back to what our friend Jeffrey Hirsch said, is that if Biden does run, historically speaking, we should see, because an incumbent president running again, you on average will see the markets rally 8 to 12%.
Yeah.
If he does not, then now we're looking at we're actually seeing a negative return of on average 1.5%. So when you look at those two data points, and it really depends on whether he runs again or not. I mean, I hope he does run again. Whether you want him to win or lose is not really the point of this conversation right now.
Right.
But seeing him run again would be good for the markets, be good for your portfolio, and especially for your clients.
And then I forgot one other big piece here is that there are record amounts of cash sitting in money market accounts, the 5% Schwab account, the SCWWF, et cetera. We, again, no playbook. we've never had a situation where people, on average, have 19% of their retirement portfolio in a money market account, right? Because who would ever buy a money market account when you're getting 25, a quarter, 1% of yield?
Right.
Just that money moving back to normal historic levels means that my S&P 4800 called me and Ed Yardini are tight on this now, Todd.
Dr. Ed Yardini.
Doctor. Oh, that's right. Everybody wants to be a doctor, for crying out loud. I have my diploma up there. I got it at Walmart. But that money is the X factor, in my opinion, that we've just never seen before. And as the market continues to just, climb the wall of worry, let's use another axiom, people are going to say, I got to be part of this. I can't, my stupid brother's making more money than I am. And I hate that part. So
there you go. Well, listen, let's leave it there on this block, because coming up after the break, we're going to ask Ned what he's thinking about as far as allocations go for next year. Sectors, and we're going to try to break it down for everybody. Also, a few other surprises, I'm sure. So we'll talk more about that later on. So you're watching Buy, Hold, Sell today. With us is Ned Tunmore. He is a registered investment advisor at Tunmore Financial Solutions. I'm trying to get that right. Tunmore Financial Solutions out of Buffalo, New York. Look them up online and go to them. Send them all your IRA money. So we'll be right back after the break. Please stay with us. All right, that's good.
Buy, Hold, Sell, brought to you by CrossCheck Management.
We give game day a whole new meaning. What does it mean to be a leader?
It's taking my first solo flight.
At the University of North Dakota, we lead our own way.
Like the Kentucky Derby, Woodford Reserve Bourbon is a spectacle for the senses.
A little profit taking on Wall Street today, but we saw the Dow down. However, the NASDAQ and the S&P 500 did close higher today, slightly higher. But for the month, wow, these numbers are rocking. We see the S&P 500 up 7%, the Dow's up a little over 5.5%, and the NASDAQ up nearly 10% in the month of November, with still another full week to go with the holiday coming up next week. Well, welcome everyone back to Buy, Hold, Sell. With us today, our featured guest is Ned Tunmore. He is a registered investment advisor from Tunmore Advisor Solutions out of Buffalo, New York, giving obviously some great advice to his clients on the markets and how to invest. And obviously we have Toby with us today. But Ned, I want to go to you on this one to start off this block.
That's it.
Because what am I, chopped liver?
Just not at all.
If I'm Ned and somebody asks me, how much money are you going to make me for it? Look at my last name, a ton more.
That's my call sign right there. I stamp it on all my jackets. You got it. You got it. Yeah. It's right there.
Yeah. That's right, Tunmore. Absolutely.
Yep.
But Ned,
I'm a Smith. I got nothing.
Let's go with you on this block, Ned, because I want to ask. I'm sure you have going into next year. We were just talking about the upcoming presidential election, of how it's best to position a portfolio. But for you, and since you are affiliated with MassMutual, I would imagine you were more on that conservative side. But what is your typical strategic allocation looking like for your investors?
Yeah, obviously you got to start off with the timetable first. There is no set allocation. It's going to be time and when you need the money. So you could have a kid that's in college that needs the money in a couple of years when they get out for first purchase of a house, or you could have a 55-year-old that's looking to save for their retirement, which is 10 years away. But generally speaking, I think the old adage of 70-30 in favor of equity to bonds, or 60-40, I think we're living in such a dynamic period of time right now where within the dynamic of how much time they have, picking the sectors where I think they're going to get the most bang for their buck is what I'm trying to help people with. And I know in the last segment we were talking about the Qs. Qs are up 10%. They're still down from where they were last year. I think we're going into the holiday season. Apple's going to have a new product out. I know Samsung's going to have a new product out. Technology normally runs anyways. One of the one sectors that you got to look at. You got to look at technology. I'd also say financials as well. You saw a lot of the banks getting beaten up a couple month back, with Bank of America especially, Wells Fargo down. Dividends are now a little bit higher as far as the percentages because of that pullback. And I think it's an interesting time coming into a year next year where inflation is peaked, let's just say, and rates are going to start coming back down now. There could be some opportunity in those particular sectors.
Here's another one, Todd, that I love. We've always killed it in mortgage REITs when rates peaked, right? So you have NLY, paying almost a 13% dividend. There's multiple other mortgage REITs.
Two Harbors is good.
Yeah, Two Harbors, exactly.
Yep.
And then the BDCs, the business development companies, again, who make loans, they package them and then they sell them to government and with no risk. Well, when their cost of funds go down, let's say 0.5%, their earnings go up 20%. So they're highly leveraged into interest rates coming down. And again, I'm the huge, believer in a Roth. I make every one of my managed accounts that has not converted to a Roth to have at least one Roth out of all the 14 other accounts they have. But I rolled up a lot of my stuff into one Roth. I took the hit on the taxes, but I had tax losses I could go against it, right? That Roth is ridiculous. Now I'm 65 years old. I'm not retiring. What would I do?
The day past 64, Toby.
That is so funny. I forgot to laugh. What a dick. Anyway, the bigger issue on the Roth is you don't get taxed on the income you take out unless your taxable income is over, I think, Ned, $228,000.
Yeah, 120. Yep, exactly.
Yeah.
Yes.
And so, I don't know. I think I said today, I get a $5,000, $5,500 dividend from our guest yesterday's ETF.
Yep.
The actual underlying has gone up about 14%.
Yep.
That's just one position. I have like 10 of these positions. I probably have $40,000 of annual income that I can't spend, and Todd knows I can spend money.
At the bar.
Well, I have a gold pass for that. So, but we've never had these type of high yields. Now I'm starting a new newsletter, Todd, in January.
Yeah,
called our Transformity Ultra Income.
Are you able? Can you talk a little bit about it, because I wanted to?
Yeah, absolutely. I mean, it's it's good. I'm going with a new publisher. Okay.
Yes.
But I've been waiting 40 years from this, and it wasn't until they invented these daily 1-day stock options that you could sell call options against stocks that I like anyway. It starts with stocks that I like anyway, but you're going to get more yield out of the ones that have more volatility. That's how the world works. But as I say, I just sent this out to our subscribers. I have $107,000 in Coinbase is the stock, but yep. I own this ETF. Why do I own it? Well, the thesis is that Bitcoin is going to be allowed to, because of the Supreme Court decision, to be able to have spot prices, meaning that it will be priced in real time 24/7. And therefore, that brings the price of Bitcoin up, because most of it's at a discount value, like GPTC, which is a Bitcoin trust, but they sell it at 18% discount to the actual price. So blah, blah, blah. Anyway, so I'm just looking at 50, 100, $705. I reinvest it. If you extrapolate that out to when I may retire, which is, I don't know, 75 or something, or I die, and then Marjorie's the happiest girl in town, then that position will be gigantic. That position will be just add add $60,000 a year for the next 5 years. That's $300,000 on top of the $100,000, and now I'm getting 5% a month on 400,000.
Yeah, pretty amazing stuff. So that's good stuff. I can't wait to read that. I can't wait to see it once it comes out. I know your subscribers are going to like that. Ned, what do you think as far as sectors go next year? I mean, Toby and I this week, I've been driving them crazy talking about the retail sector, but it has been a headline story all week with the data that came out and obviously the big box retailers reporting earnings. But next year, what do you think? Are we looking at maybe possibly oil and gas? Travel, we had Sylvia Jablonski. She's the CEO of Defiance ETFs on yesterday. She loves travel next year. What's your take? What are your guys telling you? Maybe MassMutual has a take on this as well.
Right. One of the things that I'm paying attention to, especially with the Walmart earnings we talked about before, is I think the consumer spending is moving towards tangible goods to experience. I have been a big believer in travel since, really since the end of COVID, which you could say was the end of 2021, beginning of 22. And it's not just the airlines. I look at the cruise stocks. I'm looking at a lot of the booking sites like Travelocity, Booking, so on and so forth. From what I'm reading and what I'm seeing, everything is record. I think the margins are not there in the airlines right now, which is why they're still in the drink. And I think we're in that catch-22 area where people want to take experiences, they want to travel, but because of all the damage that's been done, we just have not gotten back, to that level yet. And then you talk about Walmart. So Macy's had a phenomenal earnings report. Macy's actually reported good, up double digits after their numbers. But you got to believe that somewhere along the line, the pain is going to be felt by the consumer with all the inflation crunch that we've had to deal with for the past 12, 13, 14 months. So it'll be an interesting end of the year. And I think that'll predicate where everything stands next year. But I am a big believer in travel. I like energy. I'm going to continue to like energy as long as these wars are going on. And I think that, on the financial side, again, I think there's good opportunity there just with the position where everything is with interest rates leveling off and possibly rising up again.
Well, I'll tell you one thing about oil.
Yes.
Besides the fact that it's come down from $95 to $70.
Yes.
So there's an ETF. It's a reverse. The ticker symbol is SCO.
Yes.
And I have some clients that just are, they happen to live in Texas and they make their money from the energy business. So they want to own energy. But I make them buy, or I buy for them, the SCO to hedge that. And that SCO is 2X. So what we use USOI, which is a leveraged high income long oil, and then we hedge it with SCO. And so our effective cost with the hedging is it hasn't gone down in value at all because of hedging, and they're still getting these high yields.
Right.
I would just personally be careful. I mean, I've been an energy guy longer than you've been alive, and everything. I mean, everything is on that OPEC meeting, and if that comes out the day after, my buddy Brian Sullivan at CNBC is bitching and moaning to me on the text. Jesus Christ! After Thanksgiving, I have to go to freaking Austria.
Yeah.
But
Toby,
one would assume, remember, the whole thesis on oil was, oh my God, the Middle East is blowing up and, we're going to have all this. Well, that didn't happen.
Right.
They have big bills to pay.
Yeah.
They have, blah, blah, blah. So if they don't come out and say the floor is, 75, 82 is the floor from them before.
Right.
But if the floor stays under 80 and they can't, and the oil they take off the market doesn't get down, then you could very easily be at 65. And if you correlate oil price with oil companies that are more oily than gassy, there's more downside there.
Yeah.
And frankly, China is the biggest importer of oil, as you know, and China's consumption of oil has been, down.
Right.
Yeah, down sort of like CNBC ratings after we started this show. It's going like that. So I'm sitting on the sidelines with the oil stuff, but because of the SCO, what do I care? Because and I'm getting great yield, and I'm reinvesting those dividends at these lower prices
Yes.
So
Yes.
absolutely
Yes.
critical thing to do, and the time value of money is a whole other topic to have on another show.
Yeah.
Ned, before we close out the show, I want to get your thoughts on real estate. You're in you work in an area of the country that has, I would say, everything west of the Hudson has not really been robust from a real estate standpoint for a number of reasons.
Right.
What's your take, though, nationwide? Do you think that this is an area to maybe not commercial, residential? I mean, what are your thoughts?
Yeah, so you look at a guy like Warren Buffett, who bought Lennar, he bought D.R. Horton. I mean, some huge positions he bought this year. So, when it comes to his timing on that stuff, he's hardly ever wrong. And I think that you're looking at what's holding a lot of people back right now is that interest rate environment. Just taking out a mortgage or a loan or something like that is you're going to be at an astronomical rate. I really think that is maybe not next year, but within the next, call it 18 to 24 months. Absolutely. If you're not getting into it in some capacity, I think there's a pent-up demand for people that have been putting that off.
Obviously.
Yeah. And it's just, like I said, you got to follow the money. And
Ned, you're absolutely right. And if you look at the correlation between mortgage rates and home builders,
yep.
We hit that 5%, 0.009, whatever that weird little spike was.
Yeah.
And they all crap the bed. When we hit below 4.75, boom. I mean, Toll Brothers at the high end, LGH Homes in the middle end. But the affordable housing, because the builders buy down the mortgage, they take a part of the profit and they pay down your mortgage for 5% to get your actual mortgage down to a 3% rate. Nobody my age is selling their, well, excuse me, let me take it back. People my age are selling their houses, but they've already bought another house, and they take the cash and then they pay up the mortgage on that one. I mean, so it's the boomers who are screwing the millennials, and sorry for you, but in these areas like Greater Phoenix area, like Greater Florida, the guys who have concentration in these areas, certainly, Austin, by the way, real estate went and the average price is up 18%. Things are coming down because people were just throwing money at because they could work from home. And now half of the people who work from home can't work from home anymore. So Boise, Idaho, freaking houses went up 45%. My neighbor Bob has a place up in Boise. He was like, Toby, what should I do? And I said, how often do you go there? Well, like once a year for a couple of weeks. Sell the freaking thing and or rent it out because it's unsustainable. So there are pockets, and then builder, BLDR, the ETF.
Yep.
When interest rates comes down, I always buy builder because they do the components.
Yep.
And the Sherwin-Williams and the those guys.
Yeah.
And Toll Brothers at the high end. I lived in the East Coast for a long time. Todd knows this. When you see a Toll Brothers community, those things are sold out, like that when they were reasonable prices because they're incredible quality, great locations. They're always in good school districts, yada, yada. And they own so much land that's still developing.
Yeah, you're right about that. Definitely a premium on that. Well, we're going to leave it there, guys. I think we talked about everything here today. And Ned, I got to thank you. You were wonderful on the show today.
Thank you.
And how can everybody reach you if they're interested?
So we got an email address. It is etunmore@financialguide.com. And if you are kind enough, you can maybe put my website or link below on your disclosure. I don't know if you can or not, but that's the email. That's the best way to do it.
Come on,
Todd can do anything.
Can.
Yeah.
How do you spell Tunmore? Tunmore?
Yes, sir. Yes, sir.
You have to explain how somebody came up with that last name. I mean, just quickly.
My last name, how somebody got, well, it's, it was given to me at birth. So I unfortunately I can't help it.
It sounds like an old English last name is what it sounds like. It sounds like, oh yeah, we were looking for this and we just got a ton more.
You know what? It could have been that. Maybe let's go with that to make the story sound better.
All right, good.
That's awesome. That's outstanding. All right, well, that's great, guys. Well, listen, thank you so much to everyone for joining us on Buy, Hold, Sell. Make sure you watch tonight's Ravens-Bengals game, key AFC North matchup. My Ravens are going to be in there, and I know
they're going to lose.
Oh, I mean, and you're not going to get Cleveland Brown, okay, or Cincinnati, whatever.
Yes, that's right. That's right. So big game tonight, but I'm sure everybody will be watching. But we'll talk about it later. Next week on Buy, Hold, Sell, we have Emily Gibbs is going to be joining us as our featured guest. And she's been all over the news. She was just on Fox last week. She was on CNBC. She's going to be stopping by on Buy, Hold, Sell and give us her thoughts on the markets as we close out going into the Thanksgiving holiday. But on behalf of today, on behalf of Ned Tunmore and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
I want you to smash that like button.